What's going on, guys, and welcome back to another video. So as we're now heading into week 16 of my trading 212 portfolio journey, I do feel that there's time for change. And by change, I mean a more concentrated approach to investing. As it stands, we have companies in all 12 sector pies, and that equates to about 50 or 55 companies overall. So I believe that is a bit much in my opinion, as I also hold the ETFs, so I have the S&P 500 and also the FTSE 100. So I believe we do need to reduce my overall stocks. I think in the long term, this will help improve my overall gain. But as always, just before we get into that, if you're new around here, please consider subscribing to the channel, as we're only 30 subscribers away from our next goal of 600. And with all that being said, let's dive right onto trading 212. After thinking long and hard, I had two kind of main options. First of all, it was to reduce each of my 12 sector pies to, let's say, 3 companies per sector instead of 5. And the second option was to, let's say, get rid of some of the sectors that either 1, I don't know a whole lot about, and 2, I don't really have a lot of interest in either, and I don't believe in the long term there's going to be a lot of growth. For example, the utility sector pie here, even though it's in the red at the moment, that really has nothing to do with my decision. Even if it was 3% in the green, I'd still be making this choice. So I do believe my money is a lot better suited in, let's say, the tech sector, financials, consumer discretionary up above, etc., instead of sectors such as utilities and materials. My thought process overall at the beginning of investing in this portfolio was to be fully diversified across all sectors. But for example, because I hold ETFs, both S&P 500 and the FTSE 100, I am really diversified across all sectors in that aspect as well. So I believe there is no need for me to hold companies in every single sector individually also, and that's why I'm going to be targeting materials and utility sectors. So in today's video, we're going to target the 3 sector pies that firstly, again, I don't know the most about. Second of all, I don't really have the most interest in. And third of all, I believe they have the least potential out of all sector pies. And they are utilities, materials, and also the real estate pies. And the reason I've come to this conclusion is because 2 main reasons. First of all, I want to focus on pies or sectors that I believe have more potential and that I have more interest in. Like for example, just as a kind of brief rule of thumb, I know a whole lot more about Walt Disney and Facebook, for example, instead of, let's say, if we go on to utility sector, Consolidated Edison, NextEra Energy, Atmos Energy, etc. I don't actually know a whole lot about the ins and outs of those companies. They were good prices when I bought them first day, but again, I don't know a whole lot if I'm being completely honest. And I guess one of the main reasons as well, besides following my own journey to €100,000 invested, is also to kind of help others not make the same mistakes that other beginners make. And I definitely feel that one of the mistakes I have made in investing so far is to invest in too many companies. I need to start trusting my own intuition and gut and kind of start honing down on some of the companies that I feel are the best performers and the best place to keep my capital. So that's definitely a rule of thumb for anyone that's starting investing, is that you don't really need to invest in everything. You only need to invest in some companies in each sector. Like for example, we can see here in such sector pies as communication services, etc., we're up over 10% or even over 15% in some cases. Like we can see here, just for example, again, as it's on screen, on Walt Disney, we're up over 38%. But I do feel that sector pies such as utilities, materials, and real estate are really kind of hampering my performance, because even though these sectors are going up in value, the other sector pies mightn't be going up at the same amount, effectively affecting my overall performance. And we're up about 8% at the moment, but again, that could be easily in double figures, up 10 to 15% if those sector pies weren't included. So that's kind of a reasoning behind why I'm going to be doing this in today's video. So now I've went ahead and sold positions in the materials, real estate and utility pies, effectively cutting my overall positions from 55 down to 40. Now 40 is still quite a lot, but I believe it's certainly in the right direction in terms of condensing my stocks by getting rid of 15 companies that I believe overall were the worst 15 in my overall portfolio. So I'm kind of happy to have got rid of those. So now if we just scroll back up to the top here, we can see now that we're up just under 10%, and we also have €835 free funds, and we have €5,075 invested. So next up now, we'll decide where we're putting that €835. Before we decide what we're going to do with this excess money, I actually still believe we need to cull some more companies, as we're still above 40 companies, and that in my opinion going into 2021 is a bit too much, especially while I hold the two main ETFs in the UK and the US, so that's certainly a lot of diversification right there. So what I'm actually going to start doing now is I'm going to cap each of my sector pies at about 3 companies, with the exception of 2 sectors, and I'm going to keep my 5 companies both in the financial and the tech sector, but all the rest I want to cap at 3. So just starting off with my communication services pie, we're currently up 14.75%, and here the 2 companies I'm going to keep, again I'm going to cap it at 3, but I'm only going to keep 2 here, and they are Walt Disney and Facebook, as they're definitely my most 2 favorite companies out of this sector. So we're going to be getting rid of Netflix, Verizon and AT&T for now. Next up we have my consumer discretionary pie. We're going to hold on to 3 companies here in the form of Tesla, McDonald's and Nike. So we're going to be removing Starbucks and Target. In consumer staples, we're going to be getting rid of 2 of the 5 companies here, and we'll be getting rid of Walmart and Beyond Meat, leaving Coca-Cola, PepsiCo and P&G the 3 remaining companies. The next 2 sector pies, energy, we have 3 here: ExxonMobil, iShares Global Clean Energy and Chevron. I'm happy to keep all 3 of those. And similarly with my ETF, the Vanguard S&P 500 and the Vanguard FTSE 100, I want to keep all 2 of those also. In finance, this will be one of the exceptions that I've stated, along with the technology sector. I'm happy to keep this at all 5 and not getting rid of any of these companies. Next up, healthcare pie, we are going to be removing 2 of the 5 here, and they are the bottom 2 in the form of Stryker and Abbott Laboratories, keeping Pfizer, AbbVie and Johnson & Johnson. Next up we have my industrial pie. We have 5 companies here, and we'll be removing 2, and they're the bottom 2 in the form of FedEx and Boeing, keeping 3M, Caterpillar and Waste Management. Earlier in the video, we removed all the companies in the 3 sectors: materials, real estate and utilities, which just leaves technology sector pie. And again, that I mentioned earlier in the video, this will be one of the exceptions where we're keeping all 5 companies. So Microsoft, Amazon, Apple, Alphabet Class A and IBM Corporation will all be remaining here. So we've started off with about 50 to 55 companies, and now after doing that we are now down to 29 companies. So that's kind of more realistic, and I'm kind of hoping to keep it under the 30 stock mark. So now this leaves us, we can see here that we have €1,250 free funds, and we have €4,650 in my portfolio, and as it stands we're up about 10.7%. So now in the next video tomorrow I'm going to kind of sleep on it tonight and decide where that €1,250 is going to go. I have 2 options realistically. One will be to put it into the remaining companies that I already own, or 2, it is actual to start swing trading also, as I really want to start to get into that form of investing also. And actually, now that I think of it, there even might be a third option that I need to decide on, and that might be having another pie, let's say an ARK Invest pie, which would be a bit more risky, but there's a lot more potential also. So I'll keep that for tomorrow's video, and I'll decide tonight, and again I'll update you all tomorrow. And with all that being said, that brings the end to today's video. I just wanted to kind of give you a heads up on what I was doing today in terms of investing, and for once I was actually selling instead of buying. And as you saw, we've sold about 21 companies, or even 25 companies, up to about 25 companies sold today, just to kind of more concentrate my portfolio and to get rid of some of the companies that are kind of liabilities in my opinion at this stage. And I do want to keep my investments down. That's one of my goals for 2021, to kind of concentrate my investments more and to have less companies in each of my portfolio sector pies. So just quickly now, communication services, we only have 2 companies left: Walt Disney and Facebook. Consumer discretionary, we're left with Tesla, McDonald's and Nike. Consumer staples, Coca-Cola, PepsiCo, P&G. Energy, we have ExxonMobil, iShares Global Clean Energy and Chevron. ETF, we have the S&P 500 and FTSE 100. We remained all 5 of my financial companies: Visa, MasterCard, JP Morgan Chase, Bank of America and Goldman Sachs. We are left with 3 in my healthcare sector: Johnson & Johnson, AbbVie and Pfizer. In industrials, we kept 3M, Caterpillar and Waste Management. We removed all companies from materials, real estate and utilities. And with tech, we're left with the normal 5: Microsoft, Amazon, Apple, Alphabet Class A and IBM. So if you found this video anyway helpful or entertaining, it'd be brilliant if you consider subscribing to the channel if you're new around here. And as always, please drop a like on the video as it would really help me out, and comment below on your thoughts and opinions on this process where I'm starting to dilute, or should I say more concentrate, my portfolio and get rid of some of my liabilities. Thanks very much guys, and I'll see you on tomorrow's video where I'll discuss what I'm doing with that €1,250.